Hi, welcome to the May version of Transaction Review and Calculator Practice. Dimitri, great to see you. I'm going to try to, yeah, well, very good. Well, thanks again for being here. So far, it's only me and you. I know there were several people signed up, but then I switched the time because I had to go to San Diego for a conference. And so thanks for sticking with me there. Okay, so today I'm going to be talking about how to explode a small self-directed IRA. As I was just, talking with you, and I think I will just go ahead and mute it just for now, and use the chat button if you want to say something. I just want to make sure the recording's as clean as possible. But self-directed IRA, been hearing about it. Finally, when I went on the Walter Wofford's IRA fun cruise last September from New Orleans down to Cozumel and back, while I was on the ship, they cornered me and I filled out an application and I sent here's how much I sent in, $2,000 to my very first self-directed IRA with Quest, Quincy Long and Quest. He's down there in Houston, Texas. That's the main office. Anyway, so I thought, well, what the heck am I going to do with $2,000? But at least I opened the account, right? That was a big thing, just to open the account. And now I'm going to show you a deal that I'm going to show you how I'm taking a really small amount of money and I'm going to grow it really, really quickly. And I think you'll like this because if you're going to be one to be a rainmaker or be one who sources deals or finds them on your own, and then you bring in financial partners or others investors who are going to go in with you, and maybe they're okay with a little bit less of an interest rate than you can take. Then you can take part of your money and part of their money at a lower interest rate, and then you can really leverage any money that you have to get a much higher yield. So I'm going to demonstrate exactly what that is. Also, when I was in Dallas, I met a guy at David Phelps' event. He's a dentist in the Dallas-Fort Worth area, and he's an investor and does a lot of training with doctors and dentists and veterinarians and helping them transition from professional life into long-term investing. Anyway, so one of the dentists that was there from Tennessee, just so much fun, a great guy, and he goes, I've never bought a note, but I really, want to do something with you. When you get a real safe one for my first time around, I want you to give me a call. And so a couple weeks later, there was a guy that called, filled out my consultation request form, and he paid me to consult with him because he had 5 properties in Texas that he owned free and clear, and they were rentals, and he didn't want to be a landlord anymore. He wanted to sell all 5 properties on terms. He wanted to offer owner financing, and then he wanted to know what could he sell the notes for. So the first one was so slam dunk easy. So let's just go through and see why I thought this was an excellent first note, super safe for this guy who wanted to just dip his toe in the water and, figure out, oops, let me move this over a little bit. Get his feet wet without doing a lot of risk. So I wanted to keep him really safe and happy. And so here's how it went. So the tenant had been in there for several years, paying like $500 a month, $600 a month rent. Then he approached my client who hired me to help him figure out the owner financing piece and how the secondary market for notes worked. And he said he's willing to put $25,000 down. And so the way the deal ultimately worked is they agreed on a sales price of $42,000. I think he was originally thinking he was going to get $50,000, but the guy said, hey, if I'm putting down this much money, and I'm willing to pay 8%, I want a better price than that. So here's what he came up with. The purchase price was $261.45. I don't know why this is a funky little number. And he put a down payment of $25,000, which is right over 50%. So it's probably 60% down payment, which is extraordinary. This is not an ordinary sort of scenario, but in this case, you can see that it's going to set him up to have a really, really strong note. So that's the principal value, or present value, or loan amount right there, $17,261. The sales price minus the down payment, the first note. 8%, that's a very decent interest rate. 9 or 10 would be better, but when you're getting more than 50% down payment, this is still a really great thing. Here's another great thing. It was fully amortized over 5 years, super short amortization. So the 25% or 1,000 down makes this note very strong. The fully amortized over 5 years makes it very strong because time value of money, inflation doesn't have time to destroy the future value of those payments. In 5 years, you don't lose nearly as much as you start to lose after that point. So always remember, more money sooner is better. So it's fully amortized, so there's no future value. There's no balloon. And so I just put a 0 there. Or the computer, if you don't put anything in there, the calculator just assumes that's 0. So now I'm going to calculate for payment. So his monthly payment is $350. And so by the time he adds in taxes and insurance, he's probably up to $500 a month, which he was paying in rent anyway. But in this time, he's just going to own it. After 5 years, own it free and clear, paying the same or less that he was paying in rent, as long as he put this $25,000. Most tenants can't come up with this kind of money. Just saying, it's usually they're asking for 5, 10, maybe 15% down. But this was a really nice one. Also, I like Texas because it is a deed of trust state. So if you have to foreclose, it's really quick and easy to foreclose. So you're not exposed for a long time if you have a default scenario. So that's another thing. So this is a super strong note all the way around. I had it under contract to buy it for something like $14,000. I was going to buy it right away for $14,700. Let me see what that would have been. I'm just sort of remembering because it changed a little bit. So I offered $14,700 for this $17,000 note. So I'm going to put that in present value because that's what right now is going to come out of my pocket. Excuse me. For the right to receive 5 years worth of payments of $350. So now let me calculate what my yield would be. Great. That's awesome, right? Super safe note. I'm going to get a 15% yield with a lot of safety here. I love this. And, it's a good deal for the guy because I really held him by the hand. He didn't know the first thing about owner financing or notes, and the attorneys that he hired kind of needed a little guidance too, which was a little odd. But anyhow, he got an education and he's not paying a broker fee. I'm just buying it for an investment. But, if I wanted to flip this to someone who would take 10%, I could have made, a couple of $1,000, $1,800 just brokering it. But obviously I just want it, for my own. But anyway, what happened is he couldn't sell me the note right away. So he had some sort of trouble with the way his corporate paperwork or his LLC was put together, and title wouldn't let him close, so it drug on and drug on and drug on. But the way I wrote my contract was that it was $14,700 for 60 payments, and because 2 months had elapsed, I only had 58 payments left. So basically that means that I just reduced my purchase price, what I'd pay for the note, by each monthly payment that I didn't get. So 2 months, so I took out $700 from my offer by the time we closed. So basically I'm offering $14,000 for 58 payments of $350. I wonder what my yield was. It was 15 before. Oh wow, it went up a point just doing that strategy, right? So that's a really nice return, and it's a small deal. So to make it worth my time and effort to do it, it has to be a pretty decent yield. So here's what I did. Instead of brokering this to someone, I usually don't like to broker. I like to keep notes. I decided I'm going to have something to brag about, or at least share, when I go on the next IRA fun cruise, which is coming up Thursday. We're going to leave from Orlando, go down to Aruba, Curacao, Grand Turk, and there's going to be 4 days of, TED Talk style seminar days, and it's going to be a really amazing time with amazing people. But when I get up to do my speaking, I want to at least say that I've done one deal in my self-directed IRA. So there's a lot of different ways I could have gone, but this is what I decided to do. That, you remember that $2,000 that I have in my self-directed? I'm saying I'm just going to take $100 of my money, and I'm going to take $13,900. See, I need to bring $14,000 into escrow. The note seller is paying all of the closing costs. That's how we wrote the contract. So he's going to bring in $13,900, and he's thrilled to death with a 8% return for in exchange for immense amount of safety and the fact that I'm going to service and manage the note for free for him, and he won't, he'll have a lot of protection and oversight in no matter what happens. So he's going to put in $13,900 from his self-directed IRA with Quest also, and he's happy with an 8% return. And I think at the time I thought we were going to get it right away, so I think I said 60. Anyway, one of the ways I figured it is he was going to get, I said, how much of this, what's 281 divided by 350? Okay, he's going to get 81% of the note. But at the time, however the numbers worked, at whichever month I calculated, it was 84. So he's getting, here's the monthly payment, 350. I calculated he's going to get 84% of the note. So if 350 comes in, he's going to get 294. And 2 months have gone by, so now we have 58 payments. And so his yield, instead of the 8 that I promised him and he was thrilled with, his yield goes up to 8.6. And so he's going to be even happier than he thought he was before, except for the fact it took us two months to put this together because of all the little glitches and things. But so he's super happy, right? Or if the person pays off early, whatever the amount is that comes in every month, I'm going to service for free so that I don't disqualify my own IRA. And when that 350 comes in, I'll give 294 to him. What does that leave for me then? Or if it paid off a year from now, whatever that number is that comes in every month, he gets 84% of it, and I get 16% of it. If there's a late fee collected, he gets 84% of it, and I get 16% of it, even though I'm doing all the servicing. I cannot make a profit, associated with managing my own IRA. So this is just a future value sort of thing here. But you can see that I'm recalling the payment to get it up here in the number. So 294, and if I plus 350, so we'll get the difference between what I owe him and what the payment is. So I'm going to get $56 a month that I can send to my own Roth IRA. So let's put that as a negative number, and I'll stick it over here in the payment. I'm going to have 58 payments of $56. But what did I pay for my 16% of the note? I only paid $100, right? So my present value is $100. Now I'm going to solve for yield. Wow. I'm making a 672% return on my money. So, now granted, it's not a lot of money, but this, over the next 5 years or so, this will put $3,000, $100 out, and at the end of the term, I'll have $3,000 in it. So if I do this a bunch of times, can you see that it wouldn't take very long for me to totally explode my Roth IRA, and that when I need to take distributions, they'll be completely tax-free? I think that's amazing. And there's ways that I could have had an infinity return too. I could have bought the note, assigned it to him for $500, and still kept a piece of it, right? If I'd have had him bring in $14,500, then my IRA would have made $500 up front and still probably been able to keep $20 or $30 or $40 a month. So then that is an infinity return. But I just wanted to do it this way. I'm going to try it a bunch of different ways through my Roth IRA and through some self-directed inherited IRAs that I'm getting ready to set up for my kids as well, to kind of give them, something to leap from when they're ready. So anyway, any questions? Let me unmute you. So did that make sense, Dimitri? Doesn't that seem crazy? How I can take $100 and make a 672% return? Yeah, so they were very, very happy with 8%. And in fact, I'm giving them 8.6%. But I said, how much of the monthly payment do they need to get the yield that they'd be happy with? And it is for someone who's getting started and they're having me totally babysit it and this much safety. It's a very good return, very good. And lots of people are willing to accept less, but typically I'm generally in that 8 or 9% when I'm, investors that don't want to have anything to do with it, and I'm taking care of it. And this is super, super safe. And it's hard to find small, opportunities for small amounts of money to make these kinds of returns. Usually, if you're going to be a private lender, at least in my neighborhood, you got to have 50,000, 100,000, 500,000 to be a private lender to get 8, 9, 10%. So this is a very, very good deal for him. So then I just reverse engineered it. I go, okay, he needs $294 a month to give him the yield that I promised him. So what's left over for me? And that's when I figured out, oh, I'm making a really nice return on that. And if I did that 10 times, I could do it with my $2,000. I could do that 20 times, right? Then what's 3,000 times 20? Then I'd have 18,000. Starting with 2,000, by the end of 5 years, I'd have 18,000 in there if I could, step and repeat and do this over and over again. Well, I think where you're going with that is usually it costs $10, $15, $20 a month for servicing, but my company, I service my own notes and notes that I have an interest in, so I'm going to service it for free. So does that make sense? I don't know what happened to your sound there, but I'm not allowed to even make $5 servicing on the outside, because that would be like a prohibited transaction where I'm self-dealing somehow. So I cannot make any money. Like if my self-directed IRA owns a piece of property, I can manage it, but I can't make money for managing it. So if I have a note, if my self-directed IRA has a note, I can service my own note, but I can't make money doing it. All the profits got to go in there. So I hope that makes sense. But anyhow, I was just thinking this was a fun way to show how you can leverage with knowledge and some effort in positioning yourself and getting other financial partners that want to partner up with you. There's all different ways I could have put this deal together, but this is just one example, and it should be pretty exciting to see how you don't have to have a huge amount of money to really grow quickly and be able to keep up with inflation with your retirement account. So anyway, I guess that's it for tonight. I really appreciate you being here, Dimitri, and all of you who looked at this afterwards. I appreciate you. I really love having you as part of my club and the community here, and I wish you the best. And I will be on the IRA Fund Cruise from May 8th through May 17th. So basically, I will catch up with you guys near the end of the month, and I'm wishing you every success until then. You have a good night. Take care. Bye-bye.